Hello, everybody. I'm Sebastian from the Investor Relations of Carl Zeiss Meditec. I look forward today to discuss with you and guide you through the topic of the Chinese MedTech market and particularly ophthalmology market. China is our most important country market at Carl Zeiss Meditec and holds a lot of promise for the future, as I will show you in just a few slides and provide you with some background information on it. If we look first at some macroeconomic data and some healthcare specific data on the Chinese market, we see substantial growth opportunities. China has the biggest middle income population in the world, the biggest middle class in the world. It's a phenomenal long-term achievement of the economic system to have created such a large middle class. There's a lot of consumption power emanating from that, and it benefits many sectors, including the healthcare sector. It's also in part due to the one-child policy and the long-term consequences of it, a very much aging population. We have 27% of the world's aged population living in China. The GDP is very high at 18%. It's an enormous economy. The healthcare expenditure at the same time is a bit lower than the overall GDP. So there's clearly a gap here in that the healthcare services and healthcare infrastructure is not developed at its full potential. And I think we can look at the chart on the bottom right to see that more strikingly. The healthcare expenditure per capita in thousands of US dollars in China is very low, significantly below, 13 times below actually what it is in the US, more than 8 times below what it is in Germany. So we clearly have a lot of upside here if we can see an increase to Western standards or even to some other emerging markets standards who are already ahead of China in addressing this opportunity. The MedTech market in China is 164 billion and is expected to grow to 230 to 300 billion in the next years. Focusing on two facts here in the left column at the bottom, the myopia population in China is 50% of the global myopia population, meaning short-sightedness is very, very common. 700 million people. The young people, particularly the academics who live in the urban areas in the tier 1, tier 2 cities, we have myopia rates approaching 90%, 90. So 9 out of 10 are short-sighted by the time they leave college. There are different speculations about what the reasons for these are, but certainly lifestyle factors play a role. The relatively intense study and learning environments play a role. If we think about global lifestyle trends, also clearly screen times, having a lot of display times, including for kids and young adults where the myopia is still advancing in teenage years typically, that plays a lot of role in shaping not only myopia, but also severe myopia. And due to the age factor that we already discussed and touched upon, there's also about 200 million of people with chronic eye disease. So both the myopia, which is more a problem perceived in the young population, as well as chronic disease, which is more an age-related condition, such as glaucoma or age-related macular degeneration, are massive problems in the Chinese market. So it's a perfect market for ophthalmic solutions and for both diagnostic and surgical solutions like we offer. I'll show you how Carl Zeiss and Carl Zeiss Meditec are set up in China. And my first takeaway message is that we have very significant and leading market shares in all the areas that we're active in. Our product portfolio is very comprehensive. It ranges from microsurgery, where we're the undisputed number one, to chronic disease management. That's basically the diagnostic imaging, particularly the retinal imaging products, where we're among the top 3 companies in the market, to refractive surgery, which I'll spend a bit more time in a little bit to highlight the potential how to deal with myopia among the young, where we're the clear market leader in China. A lot of growth has come out of China, to the IOL business, which we call the surgery anterior segment, the operations mainly because of cataract in the front of the eye. What you see here is the implant, the so-called intraocular lens, or short IOL. This product is needed by everybody who has a cataract and is a clear age-related condition which everybody will get at some point if he or she just turns out to be old enough. Lastly, the surgery posterior, meaning the retinal segment, complex conditions on the retina, such as retinopathies, often caused by high blood pressure or diabetes, very often undiagnosed until it's kind of too late and the surgical intervention is needed. Here we are also partially through the acquisition of the Dutch company DORC. We're also among the top 3 companies. So quite excellent market positions, building, and that's a secondary aspect that is very important, on a large industrial organization, because we're embedded in the Zeiss Group. The Zeiss Group has its own business development in China. The business development is under the roof of Carl Zeiss Meditec as well. We have our own business development team that works on new business models, on collaborations with local companies, and is exploring further steps to deepen our footprint in China. We have a big R&D organization that is developing Chinese-made products. We have a strong manufacturing organization with 2 plants that are critical. One in the Guangzhou area that is making intraocular lenses and other surgical consumables, and a device equipment facility in Suzhou, which is making all kinds of surgical equipment, both microscopes as well as diagnostic tools, at a much lower cost than in our European and US production, and very excellent quality, because these are among the most modern facilities that we operate at Zeiss. There's also an extensive registration and clinical affairs team. Very important to have good access to the regulators, and we have good and reliable track records here in getting our products approved in the Chinese market. There's a large sales and marketing team. The sales and marketing team is run by the Carl Zeiss Group in China. Managing its operations together with the Carl Zeiss Group has been advantageous and synergistic for Carl Zeiss Meditec. Great framework here, how this has moved us into the pole position in the market over the last 20 years. And the dealer network that is used in adjacent areas to complement the access to the customers is also quite strong and well established. Historical artifact is that Zeiss has been, with its products, has been present in China since the 1950s. So that's quite a significant historical background. The Carl Zeiss consumer brand has been around for that long, particularly through the telescopes, binoculars, and glasses. There's a long tradition of brand awareness and brand know, and show you an interesting data point on that in just a moment. Last but not least, a very big field force for service, for the equipment, and for the surgical products in China on the ground that we can utilize to keep our customers happy with our products. If we look at the performance over the last years, it's clear that no other market has grown like China for Carl Zeiss Meditec over the past decade. It moved from being just 6% of group sales in fiscal year 2012-2013 to 26% in 23-24. You also see on this chart that there was actually a bit of slowdown in the last couple of years. I will talk about that in a moment and address that. But still, even if we include the slowdown, the constant average growth rate, or CAGR, has been above 20% for the whole period. If we exclude the 2 weak years just for the fun of it, it has actually been around 30%. So you can see it's been nothing short of a massive growth trend over the last years, turning China into the biggest market that Meditec operates in. And one of the reasons for the strength, I already alluded to it on the previous slide, is on the bottom left, where you see our brand awareness in China, and this, I almost couldn't believe it once I saw it for the first time, exceeds even our home market of Germany. The Zeiss brand is massively well known in the Chinese market, particularly through its consumer exposure. Glasses, binoculars, telescopes, camera optics, all these products have been around in China for so long. Zeiss is basically a brand that is synonymous for the most excellent optics that you can buy. And that helps us in the consumer-facing areas of our MedTech portfolio in particular, like refractive laser surgery and cataract surgery. Not to forget about the headwinds that we had been facing and that explain the somewhat weaker performance in the last 2 years. I will go through them and explain a bit. We've seen in China in the middle of 23 a significant anti-corruption reform, which for Zeiss, with its high anti-corruption standards and the code of conduct, has never been an issue, but which has led to significant uncertainty in the buying behavior of our customers, who at some point were not sure exactly what level of training, education, introduction to products they could accept without running the risk of being targeted by some of the anti-corruption measures. While the effect of this has been abating over the last year, it has led to a 1 to 2 year uncertainty in equipment ordering behavior, which has only more recently been alleviating. The consumer sentiment, as maybe the second headwind, has been relatively weak coming out of the pandemic. We all followed the lockdowns in China, the significant lockdowns in the Shanghai region, particularly during the middle of 22, and then kind of widespread regional lockdowns in the fall of 2022. China seemed to be coming out of the pandemic stronger than other markets, but basically then had a rolling lockdown situation due to the zero COVID policy being around until late 22, which burdened its economy more heavily than other markets. And the consumer confidence did not rebound to its old strength. I will also show you a chart on consumer confidence on another slide where you can see clearly the trajectory that it has not returned to pre-pandemic levels. And we see that affecting particularly the self-payer business that we have in the laser surgery area. It has been under certain pressure due to this negative shift in consumer sentiment. I don't think it takes away, however, from the long-term opportunities in China, which we will explore in more detail as well. And during 23-24, also as a consequence of the pandemic, we had to clear up a certain amount of overstocks in the sales channel. There were inventories in the sales channel that were too high because they were targeting a pandemic environment where we needed supply continuity in the case of rolling lockdowns in different regions in the country. And it was important to always have warehouse full of supplies ready, even if the region where maybe some of the stocks were shelved was in shutdown. Stocks in the market in the sales channel were deliberately increased during 2022, and we had to unwind some of these extra inventories during the period of 23-24, causing a one-time hit to our earnings. By now, stock levels are very clean, and we can actually look forward to, in the future, not having as much volatility in the sales channel again after having cleared them up successfully during the fiscal year 23-24. Lastly, there are two initiatives. One is more general in nature, one is more specific, that have been a problem for many foreign companies operating in China. First, the buy local policy, which particularly in the public hospitals can apply and is sometimes applied to put a certain amount of pressure on the hospital operators to prefer local products or at least achieve a certain quota of local investment compared to foreign-made products. We can effectively respond to that by localizing production like we are already doing in the Guangzhou and Suzhou facilities, both on the consumables and equipment side. The second leg of this, let's say, increased pressure on the competitive environment in China is through the so-called volume-based procurement, where a significant portion, in some categories all, of the national procurement of certain products is in the public hospital space, is put into large tenders, and then basically the different manufacturers in the market are played out against each other through these tenders. It has affected us in a significant way in the intraocular lens business, where starting for the first time in 2024, the whole public procurement was put into a tender mechanism where Zeiss had to submit different bids for different types of intraocular lenses, and the market shares have been reshuffled in a way that we overall held up quite well, but had to reduce our pricing. We are quite happy with how we do in the multifocal segment in particular, with the high end of the product spectrum where we have self-payer products where patients can get a good vision correction by choosing one of the superior advanced lenses that we make. And they are now at the reduced price point much more accessible in the Chinese market. So that's the good story. There's a volume upside here, but prices have gone down through the introduction of these tender mechanisms, which will recur every 2.5 years in the future by our expectation. Moving on to two things that we're going to look at in more detail, which are refractive and the already mentioned intraocular lens business. So in the refractive business, we are seeing significant long-term potential because of the already mentioned myopia. Nevertheless, the short-term environment has not been very strong. There's been a challenging macroeconomy. There's been a weak consumer climate where you can see here that retail sales have continued to be under pressure since the pandemic, and particularly the consumer confidence index has remained at a low level, at a kind of depressed level since 2022. you can see that there was a brief spike during the early 23 when the pandemic measures were lifted and the zero COVID policy was abolished by the Chinese government. But that was a false hope in the end because consumer confidence slumped again. I can only mention two key words here. The property market had an impact on the disposable income of families because there was a reduction in residential real estate prices, as well as a surge in youth unemployment, which has been problematic during the last years. For what it's worth, we think that we can observe in our business a certain bottoming out or stabilization in the last 6 to 9 months in the consumer climate, but not yet we are able to speak of any kind of a recovery. So it's still a somewhat difficult phase. We are particularly happy that despite these difficulties, our installed base of femtosecond lasers has grown throughout this period, and we're actually well in excess of 1,100, 1,200, actually above 1,200 units right now of femtosecond lasers in the Chinese market. A significant portion of our installed base is already quite old. More than 50% are up for replacement. We have now introduced a new product generation with the VisuMax 800, and we expect a significant upgrade opportunity here, and have already collected a good order pipeline for the replacement of this new product during the launch year, which is fiscal year 24-25. So the installed base continues to grow now on the new generation platform, which is competitively quite far ahead of the alternatives in the market. The traffic on our devices, or what we call the utilization, procedures of Zeiss versus the procedures of the market, have been continuously outperforming the market. We believe we are at least at 50% market share based on the market scope data. Actually, our internal data probably leads to the conclusion that the market scope data may even be understating our market share a little bit. So we are quite confident to be the clear and undisputed market leader in China. We actually get very interesting and confirming information out of our laser installed base on a monthly basis. And we can confirm that our market share throughout the weakness in the market over the last years has actually continued to grow against the trend. So despite not everything in terms of the traffic being optimal in China, and I have mentioned the decline in revenue over the last 2 years, our market share is stronger than ever, and our new generation platform, VisuMax 800, will only cause it to further grow. About 70% of the procedures in the Chinese market are of the so-called SMILE therapy. SMILE is an abbreviation for small incision lenticule extraction. It's a minimally invasive way of treating the cornea and reducing myopia, eliminating the need for glasses or contact lenses. LASIK, that's the main alternative, which is a generic term that many manufacturers are claiming. We are also offering it. It's about 30% of procedures in the Chinese market. LASIK is basically the most common and worldwide most established therapy to treat the cornea, which has first been commercialized in the 80s and 90s, but which basically got to mass market appeal in the early 2000s with the introduction of doing LASIK surgery on femtosecond laser system. It's been a technology that came to its biggest commercial success in the early 2000s in the US, but the growth of SMILE, in particular in the 2010s, driven particularly by China, has now in the Asia-Pacific region now overtaken LASIK as the largest refractive procedure. The long-term opportunities and challenges from showing us a promising path forward. We are seeing this already mentioned high myopia prevalence, the lower procedure rate per capita compared to the US, Western Europe, and also to South Korea in the region still promises across the country some upside in device utilization. Even though China has an impressive installed base, it's not maxed out relative to the enormous potential of the country. The preference for the lenticule-based solution, which is SMILE, minimally invasive solution, is at its strongest in the Chinese market. Local competitors are trying to get into the market. We're monitoring closely. As of now, there's nobody yet ready to launch a competitive product, particularly not to compete with the SMILE method in China. Let's look at the other main growth driver, which is the intraocular lens field, the cataract surgical field. It's an area of very significant volume growth. We are seeing in the chart on the left side that the CAGR over the last years has been about 20%. And particularly the 23-24 fiscal year, there was a significant jump in the volumes, which, by the way, is also continuing in the current 24-25 period, which is not depicted here. The volume increase is accelerated by the lower prices unlocked through the volume-based procurement tender that I already described. The downside is there were significant cuts. The volume-based procurement led to price cuts across the IOL spectrum of around about 40%. It was clearly a significant setback in terms of pricing. However, it's particularly pleasing for us that our share of the high-end category and our development of the multifocal or premium lenses, which on top of clearing the cataract can also promise to the patient visual correction for both myopia and presbyopia, the latter one being the main problem if you're in your 60s or 70s that you need reading glasses to effectively work on computer screen or read a book. These have gone up quite a bit since the introduction of the volume-based procurement, as much as a 30% growth here over the past fiscal year in the 23-24 period. So we're quite pleased with that. And because prices are, after the tender, set for 2 years, we believe there can be additional volume growth, and the revenue overall in China will remain on an overall growth trajectory in the next years, despite the price cuts that we and the entire industry have been facing. The longer term picture makes that very clear. If you compare the amount of surgeries in China of 4.5 million eyes on a yearly basis and for cataract to the same number in the US, where you are treating 5 million eyes, that's clearly totally out of balance. It does not make any sense at all for the US to have a higher surgery number for cataract than China, given that it's only a quarter or so of the population of China, and that China actually has a strongly aging population, as already has been highlighted. So there's a ton of upside over the next years as China keeps building the infrastructure for cataract surgery and keeps improving the coverage for everybody to have accessible healthcare and accessible coverage here for cataract and other age-related eye disease. Our strong brand power, our broad customer base, our local production facilities, and our large product of solutions, both for myopia, for presbyopia, and for cataract, and equipment for other age-related eye diseases will help us in the next years to do quite well in all market segments in China. Coming to a bit of a summary and a conclusion, we have a clear roadmap and strategy to grow in the Chinese market in the long term, and China will remain an attractive growth market despite the somewhat slower development over the last 2 years. It remains one of the key areas in ophthalmology, and our market leading positions here are enormously valuable. We have the long-term trends of the aging population and the very high rate of myopia. We also have a very active consumer society, and we have a high innovation culture and many new innovative procedures leading to new applications, a lot of science happening. China is the country that is training most medical professionals in the world, actively contributing not only domestically, but also by people who come to Western countries out of having been educated in China, contributing to progress in medicine around the world. On the contrary, as in any development of a large healthcare market, we have to deal with price pressure and budget pressure, which, for example, can manifest itself in the introduction of new tender systems, like has happened in the case of the volume-based procurement. Also a significant factor in China in the competitive landscape remains the risk of rising local competition. We have capable Chinese IOL companies already in the market. We expect there to be Chinese refractive competitors in the future as well. However, the market, as we have highlighted, promises such growth opportunities that there is a lot of excess return to be earned for many companies. The barriers to entry in healthcare and in MedTech remain significant. Zeiss, with its brand power, with its very strong innovation culture, with its large potential of IP and modern platforms such as the VisuMax 800, which has just been introduced in laser surgery, remains in an excellent pole position in the Chinese market. How can we accelerate growth? What can we do to accelerate growth? We clearly have additional opportunities by promoting the full refractive portfolio the VisuMax 800 new generation, as well as the presbyopia options that we have developed with our laser technology, such as the technology called PressBeyond, which can typically be marketed to patients in their 40s or 50s or early 60s to fine-tune the eyes, both for myopia as well as for presbyopia. And the premium IOL portfolio, the portfolio of implants for the treatment of cataract, and also what is called the so-called clear lens exchange, where IOL is implanted before the actual prevalence of cataract hits. That is an area where Zeiss has an outstanding position, and as I have shown you, has gotten even stronger through the instrument of the volume-based procurement. The retinal workflow, treatments on the back of the eye, more complex surgeries, has been strengthened through the acquisition of DORC. Portfolio of DORC is broadly not yet available in China. There's only a relatively minor amount of sales to China. Fortunately, since the acquisition, which was closed in April 24, we have achieved additional product approvals and are beginning to roll out the retinal product portfolio more strongly in China using the very strong Zeiss distribution platform. Digital procedures and other innovations, some of them which we will only be able to unveil once they are launched in the market, are in the pipeline. There's a very good technology roadmap, an exciting innovation pipeline coming. So the next years will be full of additional product launches and new growth opportunities in our surgical portfolio in particular. Last but not least, we are effectively addressing buy local policies and also cost pressures in the market by localizing more production in China. We have excellent employees and a great team in China across the local facilities. We're working on completing the registration portfolio. We're far ahead here from our ophthalmology competitors in particular, such as several competitors who are based in the US who don't have Chinese local production right now. Carl Zeiss can already procure a significant amount of China-made product for China, local for local, and thereby not be impacted by increasing the tight requirements on buy local, and also benefiting from lower production costs at the same, or in some cases, even improved quality through newer generations of product. So all in all, the China opportunity remains very significant for Carl Zeiss Meditec. The Chinese market will remain a key market and a key driver and shaper of our financial performance going forward. We have many other regional growth opportunities. China is not the only one, but given its size and scope and high profitability, it will remain also very important for shaping the future destiny and hopefully strong growth of Carl Zeiss Meditec shares. Thank you for your interest, and I hope to have gotten you excited as well about the opportunities we're looking forward to capturing in China.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.